Well, if you're in need of filling up at the gas pump this weekend, look out for a small drop in prices after midnight tonight. Let's bring in Roger McKnight, Chief Petroleum Analyst at Enpro International. Roger, I wonder if maybe we can start with the price of oil right now, because that really caught our eyes this afternoon, seeing it drop to almost $75 US a barrel. What's going on with the price of oil?
Well, I think it's a situation of demand, really, rather than anything else. I think there's a lot of problems with the situation with inflation and interest rates that's sort of driven back demand for crude oil and all refined products, including gasoline and diesel. So it's sort of everything's in a bit of a retreat mode. How long that lasts, Jacqueline, I don't know.
And what about the supply side of things? When you're thinking about, we saw U.S. inventories rising. What's the take on the supply side?
Well, we have a situation where we've got increasing supply of crude and gasoline. On the counter side of that, we have a decreasing demand from the consumer due to inflation and the threat of a recession, and a decrease in demand from the refining industry because they're in maintenance mode right now. So you've got crude building, you got demand dropping from the consumer and the refining industry. So the only way prices can go is down. Now, the crude inventory build was about 16 million barrels in the latest EIA report, which is kind of strange, and I think it's artificial because I think the Biden administration took a draw from the Strategic Petroleum Reserve, which artificially messes up prices. So as it stands right now, if I were a consumer, I would be quite happy because we got a heck of a lot of supply and really diminishing demand.
Those strategic petroleum reserves, though, Roger, eventually will be getting filled back up.
They have to, because it's a strategic petroleum reserve. It's not a pricing reserve. It's an actual inventory reserve that the Biden administration has to refill, and that's going to come sooner or later. And when that starts to be refilled, that's going to increase the price of crude because it's going to go into the SPR, not into commercial inventory. So that's going to drive up prices, and it'll be dramatic.
Okay, so in terms of what consumers are seeing and what they should expect to see, Roger, what should they look out for over the next week?
I'll go west to east, starting in Vancouver as far as gasoline pump prices are concerned. Okay, Lower Mainland, BC, and Vancouver Island, down a cent to about $1.88. These are very rough numbers. Okay.
Okay.
Alberta, we're going down 3 to $1.20, which is absolutely amazing. But they have that 13-cent holdback on provincial road taxes. Regina and Winnipeg, they're leading the pack here. They're going down a cent, but it's $1.47 to $1 and $1.51, which is astronomically high, and that's because the retail margins on gasoline in Manitoba and Saskatchewan are twice as high as the rest of the country. So I don't know how to explain that. Southern Ontario, I'm going down 4 cents to $1.42. Montreal, Quebec City down 3 to $1.55, and the Maritimes down 3 to $1.49. So everything is heading in the consumer's direction, and that's down.